Hey guys, how's everything? I just wanted to touch base on a few things or a few alternative measures that you could take to get started in real estate investing. So, most people, when they think of real estate investing, they think of the big, large down payments and saving up 3 to 25% for a down payment. But that's not necessarily the case. There's definitely alternative avenues there for you to make money monthly and continue to be invested in real estate and without the necessary headache that's involved of being a landlord. That some people are, one of the bigger complaints that I get from, especially from new investors, is they don't want to take on that hassle, which I totally understand. So a few things that come to mind as far as alternative goes are real estate investment trust or REITs. They're publicly traded companies, so you can get involved in the stock market. And if you follow the link in the description for M1 Finance, it's a really, really user-friendly platform, especially for new investors. And I highly recommend it. You give them a check out. So with that being said, I'll just jump in and name a few offhand and give you a little bit of information about what they actually consist of in their portfolio. So you can get a little bit better understanding of how the operation works with those companies. So ticker LTC is a real estate investment trust which focuses on senior housing as well as skilled nursing. So, and I think it's about a 50-50 split as far as what they own for the housing goes between the senior housing and the skilled nursing department. But when you invest with them, they do pay a monthly dividend. Their dividend yield as of today, I believe, is about 4.88%, which is pretty good for a monthly dividend payer. And it gives you an opportunity to spread your money into the healthcare field. If that's something that you're really, into and you're drawn to, you can send a little bit of support that way. And in return, they will pay you a dividend for holding shares within them. What's nice about that is it puts basically your investments on autopilot, where you put money aside or put money into the company. As the company operates and generates income and everything else, they take a portion of that revenue generated and they disperse it to the shareholders, being you. So, which is really nice. Gives you a little bit of peace of mind. They do pay monthly, so you will receive a monthly check, which you can reinvest for more dividends later on, or you can look to take out, put in the bank, pay off a few bills, however you see fit. Another good one to look into would be Apple, or APLE. So they consist of about 232 hotels, and some of their bigger brands would be the Marriott and Hilton, which I'm sure most of you or most everyone has heard of. And again, it gives you an opportunity to jump into that market as well. If you're big into like hotels, you travel a lot, and you start to see like, oh my God, there's a lot of Marriotts, there's a lot of Hiltons, and you end up staying at these places a lot. Why not be part of that action and take a little bit of money and put it aside every week or every month or however you can, garner up a little bit of change, whether $25 at a time, just little by little, and you start building that account. And they also are a monthly dividend payer, and they're going for about 9.5% right now, I believe, for their dividend yield. And it may change, periodically or, depending on the stock price. Another good alternative to Apple and LTC would be ticker O, or Realty Income Corporation. It's very popular among most dividend investors and also people looking to get into the real estate market because they are so diversified with over 6,400, properties within their portfolio. Your dollar goes a lot. You're basically a part owner in that 6,400, property, operation, if you will. They are starting to branch out and acquire, office space, manufacturing, distribution, and things of that nature. But their main focus for a long time has been within the retail industry. So you will be the beneficiary of that. And also a little side note on they also have increased their dividend 105 times since they IPO'd back in '94. So they're obviously committed to the young investor and helping keep people loyal over time, and they actually care about their investors. So that's something to also consider moving forward. Their dividend yield at this time is about 3.75%. But yeah, These are just a few. They happen to be monthly payers. I figured I'd focus on that because with most investments, people think of, a monthly check coming from a condo or multifamily or single family investment. So it keeps you in line with that, but at a much less out of pocket expense, especially at the initial cost. Um, so those are a little bit of the pros. Some of the cons would be, the tax. You get taxed on them at about, I believe it's around like 25% or so. It could vary up to 30 or 35, depending on your income bracket and whatnot. The other thing is you're not necessarily in charge of the next purchase or the next plan that's going on. So, and for some people, that's okay. They rather let, other people take over and, like I said, go on autopilot. Where some people like to be a little bit more hands-on and in control of each investment that they make, so that they know exactly where their dollar is going. So in either way, whether you lean towards a REIT, or you're thinking about just getting into regular investing and seeking out those multifamily, single family condos, office space, or what have you, the other multitude of options available in the real estate market, it's definitely an option for those looking to maybe dabble in real estate and gain a little bit of experience and start producing some monthly income and some passive income. So I hope that helps, guys, and I look forward to talking to you soon.